I'd look at them as mostly independent. I think the risk of lengthening the China-U.S. discussion is mainly about financial markets, that at the moment S&P is some 2.5–3% below the record highs. I don't think that the U.S. administration is getting a lot of pressure to do a deal just yet.
And looking at the way that the administration approached the matter with Mexico, and we talked about that briefly there, the idea of linking national security to economics, does that make it more complicated to resolve the US-China trade deal in terms of what that means for the timeline as well?
Yeah, I just think that the Mexico tariff issue, even if it's gone away, just inserted a whole new style of tariff policy that was focused mainly on domestic politics. And I think it makes it harder for businesses to plan around, and I think it makes it harder for countries to want to negotiate. It's a set of policies that are very, very hard to predict.
Do you think there are sectors, specific businesses, currencies even, that are currently mispriced in face of these trade tensions?
Well, I think generally speaking, just about the entire market is mispriced to these trade tensions. I see the economic implications as fairly significant. I don't see a deal between the US and China happening anytime soon, which tells me that equity markets are probably mispriced. Volatility is too low, and I think the US dollar is probably going to start coming under pressure in the second half of the year.
And I mean, we talk about the Mexican peso recovering slightly since Friday. Do you think the threat of these politicized tariffs, as you mentioned there, could limit, could circumscribe other emerging market assets? Or do you think that some of the talk about a fresh set of rate cuts at the Fed could offset that potential?
Yeah, I think one of the most interesting trends in May, when all these trade tensions escalated again, is that emerging markets have shown a reasonable amount of resilience. Obviously the Mexican peso not, because of a very idiosyncratic issue, but if I'm sitting there as an emerging market investor looking at my asset prices 4 to 6 weeks into these trade tensions, I'd be feeling pretty good. And I do think the fact that the Fed is responding very quickly, that the dollar is not trading particularly well, are certainly helping emerging market assets.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.